Hello everyone, and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. The short answer to the title of this video is the Roth IRA conversion ladder. I am partaking in the Roth IRA conversion ladder, and this has been my plan for a little while now, pretty much ever since I began dreaming of financial independence. And the Roth IRA ladder, really quick if you don't understand, don't know what it is, or if you need a refresher, is basically where you're converting some of your traditional IRA money, or your traditional money, if it's in a 401k or IRA, and then you take that traditional IRA and you slowly convert it every year into your Roth IRA. And the goal here is to get money from your traditional into your Roth IRA. After 5 years, you're allowed to withdraw that conversion that you made 5 years later. Now, when you make that conversion, you are going to pay taxes on the amount you convert. And so you need to do this in smaller increments. You don't want to just convert $1 million from a traditional IRA into a Roth IRA. That's going to be $1 million of taxable income. So that's going to be a lot of taxes you're going to pay. And so you want to do it in small amounts. So why am I doing it this year? Well, this year, I guess you're watching this last year, 2021. That was my first year where I became financially independent. And so my income is going to be a lot lower. My income was a lot lower last year because I didn't work the entire full year. I didn't earn as much money working the entire year as I would have in a normal year. And therefore my income was lower. So that was the first year that I thought would be a good chance to take advantage and convert some of my traditional IRA money into my Roth IRA money. And the amount that I did this year is only $10,000. That's the amount that I converted from my traditional IRA into my Roth IRA. And this is a very simple process. So when you're converting money from your traditional to Roth, it's going to be easier, it's going to be the easiest if you're doing it from the same broker. So it was really easy because I was using just M1 Finance. I just contacted them and said, please convert this amount from my traditional IRA into my Roth IRA, and they took care of it. And the reason why I want more money in my Roth IRA and I'm willing to pay taxes now on the amount that I convert is that money in a Roth IRA is a lot more powerful than money in a traditional IRA. And first things first, it's because once you have money in the Roth IRA, it's supposed to come out tax-free in the future. And so it's really good having that thought that, hey, all this money in my Roth IRA, this is all my money. It's not going to be taxed anymore. I've already paid taxes on it, and so I don't have to worry about it anymore. And plus, if you're planning an early financial independence strategy where you're retiring early before age 59 and a half, then you do have to have some kind of method in order to access that amount without paying that 10% penalty. Now, you could pay that 10% penalty, but most of us don't want to pay that 10% penalty, and so there are plenty of ways that you can get around it, and the Roth IRA ladder is one of those ways. It also helps tremendously that you're pretty much locking in a lower tax rate when you choose to make those conversions, because you get to choose basically your tax rate. You get to choose how much you're going to convert over. And so I chose to convert $10,000 because that let me remain in the 10 to 12% tax bracket. Even if the entire $10,000 is going to be taxed at 12%, that's $1,200 of taxes that I'm going to pay this year, and I was willing to make that more than I would have been willing to if it was, let's say, taxed at 22% or 24% or even above that in the higher tax brackets. And if you want to get more money into your Roth IRA, and you really should, then one of the best things that you can do is just hit the like button on this video. So if you're enjoying this video so far, please make sure you hit the like button because it really does help me out and I really do appreciate it. And we're talking about Roth IRAs and investing and all kinds of stuff all the time. So make sure you like that video so more people can see this video. But now let's get back into it, and I want to talk a little bit more about the tax consequences. So I already mentioned that I stayed in the 10% or the 12% marginal tax bracket. So the tax consequence for me for rolling over $10,000 is going to be, let's say, $1,200 of federal taxable income. Luckily for me, I moved to the state of Tennessee, and Tennessee does not tax personal income. And so I will not pay any state income tax on that $10,000 rollover. So you have to look at what your marginal tax bracket is going to be, how much you're expected to pay in taxes. And that is a very important consideration because you never want to pay more taxes than what you can pay if it makes more sense for you to arbitrage your way to paying less taxes over time. Now, we don't necessarily know what the taxes are going to be in the future, and that's why a lot of people choose to just try to get as much money into the Roth IRA regardless of what their taxable income is. And that could be a good strategy depending on if you've worked out the numbers and you think it works well for you. As a general rule of thumb, if you're in the 10% or 12% tax bracket, then it might be better to just put it directly in the Roth IRA, or it might be better to just wait until you are in that tax bracket to roll it over, or I keep saying roll it over, until you convert it into your Roth IRA at that lower tax bracket. And that's what I'm taking advantage of now. Here's my Roth IRA conversion ladder strategy going forward. So I plan on converting probably hopefully more next year, depending on what my income is from On Cash Flow. So depending on what my income is total, I plan on going like about every December as I have a good estimate of what my total income is going to be. And then I'm going to go ahead and plan on converting more money from my traditional IRA into my Roth IRA. Maybe hopefully more than $10,000 next year, like I said, depending on what my income is. So as long as I stay in the 10% and 12% tax brackets, I don't mind rolling over that amount. However, there is one small caveat, and if you are financially independent retiring early and you're using the Affordable Care Act to get your health insurance, then you have to make sure that your income doesn't go too high to where you lose out on such a valuable tax credit when it comes to subsidizing your health insurance. And so that is something that I also have in my plan. So my wife needs to use the Affordable Care Act. She needs to use a healthcare marketplace so that we can get affordable healthcare insurance. We do have a high deductible plan, and if our income goes too high, then the amount that we have to pay out of pocket for ourselves goes too high. And so there is a careful balance that needs to be made with the amount of money that I roll over, depending on how much income I made. And so that is kind of like this little delicate thing that you need to balance, so you optimize every single thing. So you have to optimize those kinds of taxes, like the tax credit. You have to optimize the amount of taxes that you're going to pay federally and the amount that you're going to have to pay state, depending on what your individual situation is. For me, it's easy because I don't have to deal with the state taxes, and then I do have to deal with the federal taxes. I track my income all the way up to the year, so I know if I'm going to be in the 10% or 12% and how much I can roll over. And then I also know, based on the calculator online for the healthcare marketplace, how much I need to keep my total income to be if I want to maximize the amount of tax credit I get from that. But this leads me to the big question, and I want to know from you in the comments below. Do you put more money into your traditional accounts, like a traditional IRA or just a regular 401k, or are you putting more money directly into your Roth IRA and into your Roth 401k if it's offered at work? So please let me know in the comments below. I'm really curious to know which one you are putting more money into and perhaps why you're doing that, what strategy you are pursuing. And then after you leave that comment, please check out another video that I created. So I created a video basically explaining the Roth IRA ladder in much more detail with actual numbers and stuff like that. So if you haven't watched that video, you need to learn more about the Roth IRA ladder. And thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.